So yeah, I have big news on 𝗠𝗏𝗧𝗧, our friend, our liquidity. He has fled the country. He has gone to Thailand. No one can find him. That is the latest I've heard from 𝗠𝗏𝗧𝗧. He is reportedly nervous about his involvement in cassava. Could be under investigation by various government authorities. You know how he is. I'm dead serious. He's a pretty paranoid guy. Nobody can find him. He's in Thailand. Left the country when things got hot. Didn't want to be involved in cassava shenanigans. You know, he was very close to the management team there. May even say he was the investor relations person, basically. So we don't know the full story of cassava. I mean, it's probably going to be told in a movie someday. It's a wild one. But yeah, 𝗓𝗏 is something else. I think one of the bag holders, she's a very nice baggy lady. She says 𝗓𝗏's reporting on Friday. You shouldn't be looking forward to that. That's not what you want. I don't know banking stocks. It's not my forte. I just started looking at the investment banks. I just want to be able to cover them a little bit for you guys. And yeah, they're complicated. I mean, you have a big pile of assets, you have a big pile of liabilities. And you've got to scrutinize the quality of the assets and the quality of liabilities. Now, in banks, that's a little bit more important. In investment banks, you hope or you expect that a lot of it is just assets for the customers. But, as we learned with Lehman Brothers, that was not the case. It was not just the assets of the customers. It's something to learn. I mean, it's definitely not easy. An old dog can learn new tricks, though. Big news, yeah, we have GameStop. Ryan Cohen buying Bitcoin or expected to buy Bitcoin, I guess, in the latest update on GameStop. So GameStop's up 11%. I'm not sure that's bullish. MicroStrategy has a premium to its Bitcoin holdings, but I would use this opportunity to lighten up on GameStop because you're basically buying a closed-end fund, right? And it doesn't really make sense to buy a closed-end fund with its NAV so above, with its market cap so above its NAV. Has anybody out there traded closed-end funds? They usually trade at a discount. They never traded at 2x premium. So you're basically buying a closed-end fund because the GameStop business isn't worth anything, right? So, it's just a holding company. The biggest question is, will they be able to buy, some business or something like that? That's the main question. The closed-end fund business has been around since I was a little kid, and it's hard in closed-end funds to even keep your NAV at, value at the market cap. So they often will trade below their NAV. Those things are going to end. I mean, when if there ever is a recession, any kind of liquidity crunch, there's an interesting data point. My partner, Marek, told me time deposits, I guess, that automatically buy the market are almost 50% of fund flows, which sounded like a really big number. That's employment-based. This is retail time-based deposits. And, he basically said, if we get unemployment, the market's gonna crack because that's sort of what's sustaining the market. And there are a number of people, there's this one 𝗥𝗡𝗙 Capital guy that says that, between passive investing and indexing, we sort of have this situation where, people just sort of have to shove money in the market and there's no elasticity whatsoever, So what ends up happening is you have Costco at 60 times earnings, and Walmart at 40 times earnings, and Home Depot, and all these other normal companies that, again, when I was a teenager in my young 20s and throughout the rest of my career, they traded at 20 times earnings if they were very high quality, and 15 times earnings if they were sort of normal. So, and maybe 12 times earnings if there's a discount. So something that's 60 times earnings, it just doesn't make sense. And we're living in this new normal, but it's not normal. And it's going to correct. And, we certainly can't, sustain having SPACs with gigantic amounts of cash trading at premium NAV. Okay, good question from CB. Why does 20 times earnings make sense but not 60? Well, wonderful question. I mean, the first is Would you rather buy a business that takes you 20 years to get your money back, or 60 years? You know, it's a little scarier. It's about 3 times scarier. The second is yield. So if you take the reciprocal, instead of 20, take 1 over 20. That's a 5% yield. Okay, well, that makes sense. You own an equity. Let's say inflation's 2%. Owning a T-bill yields you 2%. A corporate bond might yield you 3 or 4%. So owning this equity is a functional yield of 20%. Fine. 1 over 20, which is 5%. But if you do 1 over 60, the earnings yield is 1.6%. There's a huge problem with that. Why would you pay to buy Walmart to get a 1.6% earnings yield when you can get a better yield with treasuries, which are safer than Walmart by definition, or corporate bonds, which are senior, to the equity? So there's really no reason to bid up the equity at all. And, equities are just overvalued. Now, not every single equity is overvalued. The American Expresses and some other ones. And Mumu, you're just dead wrong on that. So Mumu says PE doesn't matter. Well, PE ratios don't matter at GameStop. Look, I don't think PE ratios matter at any company. It's just treasuries producing those profits. Yeah, that's not relevant either. How much confidence do you have in Ryan Cohen to invest money is the big question. Well, again, I hate having to do this over and over again, but let me sort of explain why this doesn't make sense. There's a lot of good investors in the world. PE ratios don't really matter for a whole other reasons I'll get to in a second, but they matter if they're normalized, if earnings are normalized very carefully. So if you bought, Founders Fund's going to pass the hat around. This is a VC firm. And then I looked up this fund the other day called Verition. And this fund had incredible results. Let me show you this fund's results. This is not available to anybody, by the way, on any service, including Bloomberg. So you better thank your boy here. And I'm going to be putting this on Godel. Okay, so this is going from 2024. Okay. Look at this fund. I never really heard of these guys. I've been out of the game a minute. 17 years up only. 17 years. Who does that? Whose hedge fund is up 17 years in a row? Now they had some stinkers. 0% here, 1% here, 6% here, a couple stinkers lately. But, it's still amazing. I don't see too many funds up this much. And the average is 13%. But, if you compound this... No, but you can't get into Stan Druckenmiller. So this is a 40x over the last 17 years. So he turned $1 to $42. Really incredible. So that's Verition. That's a hedge fund. Okay. Who else is good? Private equity. Who's good at PE? Who's really good at PE? Who's really good at PE like right now? Let me think. Who's putting up big numbers in PE? Let's just assume it's, Carlyle or something. Yeah, maybe, but you know what? Maybe General Atlantic. So here you have maybe 42% sounded, 42x sounded a little high. It's 8x, which is still quite good. Thank you for pointing out the discrepancy. That's very helpful. It's a monster hedge fund. Not many people can do that. So let's say General Atlantic. This is a PE. Okay. So all these funds, again, let's do some of those numbers. Let's say the minimum investment here is $1 million. We just did Verition, 13%. $1 million. Founders funds, maybe it's riskier. It's going to do 20%. And General Atlantic, somewhere in the middle, maybe it's doing 15%. But here you have Ryan Cohen, and this is, GameStop. And the minimum investment is whatever you want, but let's pull up GameStop model. And this was last couple of quarters ago, but I think it still serves correctly. I don't think a lot has changed. But you know what? Yeah, let's just get the exact recent thing because they have 10K out. It's 447. Where's this dilution coming from? I think RocketLab is, I don't have a strong opinion. I probably should not have included it in the bag holder in the bag 7. So I'll recap the bag 7 and probably rebalance it. So we'll have a quarterly rebalancing, just like the S&P of the bag 7. I don't know. We'll figure out who to replace it with, but it's probably not it's risky. There's a cult, but you know, I don't know if it's deserves the title, the eminence of the bag 7. That's pretty serious, you know, title. Okay. So GameStop. Okay, same story in GameStop, basically. Okay, so you might think Ryan can make 15% a year at GameStop, fine. But here's the thing, you're paying $12 billion, okay, for $4 billion. So you have $4 billion now on the balance sheet, 4775, and you're paying 12.617. I mean, think about how crazy that is. Why would you pay $12 billion for something worth $5 billion? I mean, literally, you know what the net asset value of this fund is. It's $4.7 billion. But you want to pay $12 billion because you like this guy. Well, guess what? Everybody likes their fund manager, otherwise you wouldn't be invested in the fund manager. But when these guys, who have better track records than Ryan Cohen, by the way, ask investors for money, they don't say, hey, you're going to give me $1,000, but I'm going to assume it's already worth $4,000. No, it's worth $1,000 still proven otherwise. It's not worth 2.6x. You know, nobody can easily make big gains. You can say the same thing about a founders fund or a hedge fund or whatever. Like, it's not that simple. You know, so the public markets are giving you credit ahead of time. You know, imagine if you could get paid fees ahead of time. You know, for example, if Verishin raises $4 billion of cash, same exact as GameStop, right? They both raise, you know, GameStop, he's got 4.7 in the bank. Okay, Verishin has 4.7 in the bank. If they can get to 12 billion and triple the client's money, then they get a fee. And the fee is 1.6 billion. But they still have to triple the client's funds first. It's really it's kind of madness. And at 15%, how long would it take? How long would it take to triple the client's funds? Well, let's see. 5 years? Nope. 6 years? Nope. 7 years? 7 years. 7 years of 15% gains. Okay. Well, what if he does 30% gains? Well, then that would be great. But we just don't know. Many of these guys are billionaires. What do you think? These guys aren't billionaires too? You think Peter Thiel's not a billionaire? The guys running these firms are not billionaires? Of course they're billionaires too. You think these guys haven't made big wins? I got stories about these guys that put Ryan Cohen to shame. But when they ask for money, they don't automatically assume you get a 3x, 4x, you know, they have to earn it. So I don't know. It's to me, it's really wild. Let's look at a closed-end fund, okay? Never selling. I love the idea of never selling because like it changes the stock price. I think this is really funny because you can have a stock that's 95% owned by one guy who's never selling. Like the trust can't sell. And that stock price will be the same volatility as a stock price where it's 1% holders. It doesn't change anything because the marketplace is a bid and ask, and the bid and ask is determined by the buyer and the seller right now, not these guys on the sidelines. In fact, it probably makes it worse. So to me, that's the baggiest comment of all. It's an insane thing. It didn't work very well for AMC. It didn't work very well for many other companies. Ryan Cohen's the best investor of all time. Wow, that's a that's a strong one. Roaring Kitty is the best investor of all time. You gotta be out of your mind. You got Roaring Kitty's tax records? All right, so let me look at some closed-end funds and show you how this works. Now, look, admittedly, these funds suck, right? Like, you got to keep that in mind. But the point is, like, here's one, CII. So this is called the BlackRock Enhanced Large Cap Core Fund, CII. So these guys have holdings, and then the holdings of this company are worth $20.80. So it's just like GameStop. They have a balance sheet, okay? It's $800 million. The stock price is $19.18. That makes sense. They got $800 million of stuff, right? And it trades for $780 million. That makes sense. Or whatever it is, $750. Because if you have $800 million of stuff, you should be trading for around $800 million. You know, to be exact, they have 40.9 million shares outstanding. So there you have it. If they have 851 million of cash and investments, and the investors say, you know what, it's worth $784, and maybe you want to buy this stock because they got $21 of stuff, so why not? They don't have any debt. It's a closed-end fund. So there you have it. You can trade this stock at CII, and this is the cash, this is the market cap. Why? Now look, you know, Brian Cohen may very well be a great investor. That's fine. But mutual funds work the same way. Hedge funds work the same way. There's a lot of great investors out there, and there's some not so great investors out there. The idea that you should pay this guy ahead of time. So this thing owns Microsoft, Amazon, Alphabet, Apple, etc. It's just a large cap fund. It's not too far from the S&P 500. So it should trade at NAV. But again, if you buy a hedge fund like Baker Brothers or RTW or any of these good drug hedge funds, or some of the classic hedge funds like Point72 or Citadel, if you had a share of Citadel, great hedge fund, right? One of the best hedge funds ever, and you had $500 million in Citadel, or $500,000, whatever your level of money is. It could be $5,000, doesn't matter. You had $500 million in Citadel, and they said you put in 100 and it turned into 500. You said, wow, that's great. But Citadel has a thing where you can't withdraw your money, for another 7 years. You have to sell your ownership. And ownership is just like a stock. It's called the LP stake. Trust me, I'm not upset I missed out on GameStop. I made 24x my money in the last 5 months. So I don't get regret on the stock market. I'm a lot older than you. I've seen a lot bigger rallies in GameStop. I've seen a lot bigger drops in GameStop. So I'm not worried about that. I'm just trying to explain to you, teach you something. The Citadel lockup's not that bad. But the point is, let's imagine that there's a long lockup. Yeah, I did it live on live stream, Phil. It's all on video for you to watch. So Citadel is, you make 5x and you have this limited partnership stake. It's illiquid, but it's like a stock. And you could say, you know what, Citadel, I want cash for this. And I say, we can't give you cash because we're still in these investments and it's going to take some time to give you your money back. So, if you want to wait a couple of years, we can do that. Or you could just sell your position in our fund to somebody else. Okay? And you say, you know what, I'll do that. Who do you think I should sell it to? No, listen, this is an imaginary scenario. Just work with me a little bit. So you say, okay, you know what, I'll go to George Soros. He likes these kinds of things. Mr. Soros, I have a position in Citadel that's worth $500 million. And he says, yes, I know Citadel very well. It's a great fund. It's probably the only fund better than mine that's ever been made. Certainly, I'd like to buy this stake you have. You put in 100, you said, yes. And you waited some years, yes. And now they're telling you it's worth 500, correct. And how are they telling you it's worth 500? How do I know it's worth 500? Well, they have this third party that adds up all the money, and they're telling me that my chunk of the firm, which is only 1% of the firm, is worth $500 million. All the assets combined and liabilities, it all adds up to $500 million. I just have to wait a few years before I can get my money back. Okay. And imagine you're surprised when he says, you know what I'll pay
for this $500 million stake? What do you think he should pay? Before we get into the math, pretend you're George Soros sitting in that seat. The stake in Citadel is worth $500 million. What do you want to pay? 300, 400? You all want to pay below market rate. 50? It's worth 500. It's a $500 million current value. Someone might pay 500, sure. Someone might want to pay a premium, a small premium, because the fund is locked up and it's hard to get in. 480, yeah, I would offer 400 something, maybe 450. You know, so imagine you're surprised if he said, you know what, I'm willing to pay 1.3 billion. What? Why would you pay 1.3 billion, Mr. Soros? I mean, I'll take your money, but that's crazy. He says, well, the fund has Ken Griffin. Ken Griffin is one of the richest people in the world. He's one of the best investors of all time. He said, right, but the assets are worth 500 million. You know that, Mr. Soros. I want to make sure you don't sue me afterwards or something like that. He said, yes. He is so good that I'm willing to pay extra for him because I like him that much. And you say, well, you know, Mr. Soros, you could actually just give him 500 million and it'd be worth the 500 million. The fund doesn't, you know, why would you pay a premium? And he says, I just want to do it. That's the insanity of GameStop. Pay the fund manager the value. So look at Eddie Lampert's case as an example as well. The old Eddie Lampert story is a good one. All right, quantum pumping up a bit. You know, we don't know why particularly, but the animal spirits have gone up. I'm not shorting GameStop because I do think we're in a bubble. There's lots of like this out there. It's not just GameStop. I do think Ryan Cohen's very good. You know, I don't think that there's anything wrong with Ryan. You know, I have a huge position in these quantum stocks. I think I'm fine for now. So, you know, I don't have any problems with Ryan Cohen. It's just the value. You know, I buy bargains and I sell things that are too expensive. That's my job as an investor. It's your job as an investor. It's not your job to be a cheerleader. You know, your job is the S&P's down 7 basis points right now. It's just your job to find good investments and also find good trades. So in a lot of cases, the trades it doesn't really matter what the fundamentals are if you get the trade right. You know, you get paid on trades. You don't get paid on fundamentals and stuff like that.